Hi, welcome to the Market Alert for Tuesday the 17th of January 2023. Just before I get into this, just to let you know, unfortunately I will be missing in action for tomorrow and Thursday and back on Friday. So there'll be no Market Alert tomorrow or Thursday. Okay, let's have a look at yesterday. It was a quiet day. I forgot to mention yesterday it was Martin Luther King Day, so the cash market was closed, and hence the news headline, quiet news flow and thin volumes with US cash markets closed, in observation of the Martin Luther King Jr. Day. The only other news is the World Economic Forum invents new word to describe the extreme chaos gripping our planet. It's called polycrisis. And obviously polycrisis means multiple crises. So yeah, that's about it. They've all flown there in the private jets, doing their bit for the reducing their carbon footprint, and they've employed also 5,000 of the Swiss Army to protect them, according to redacted news system, and also on Zero Hedge, great article about what's going on out there as well at the moment. The main thing obviously is to try and implement the CBDC, so well worth having a look and a read about what is actually going on out there at the moment, but your best choice is on Zero Hedge. Economic news for today. What have we got? UK claimant count, or unemployment numbers as they used to be called. Day 2 of the WEF. And not a lot else. Just Empire State Manufacturing is the main one. 10 a.m. you've got the German ZEW economic sentiment as well. So not a lot to report there. Say quiet day yesterday. Gold-silver ratio sideways to higher there. So let's have a look at the Dow and the other stock markets. Like I say, a bit of a whistle-stop tour because there was barely any movement to shout about yesterday. So in the Dow, you can see yesterday's activity, very narrow range, down on the overnight, sitting at the 78% retracement there. 30-minute chart, you can see yesterday morning the market down, managing to come back and then moving up slightly with the futures to Friday's close. Overnight, the market drifting a bit lower, below the DP there. But the key here is obviously going to be the low of yesterday. If the market does move lower, it'll need to hold there. And in the daily chart, you'll see why, because it'll also take you down to the 5-bar moving average. Just going to draw in some fibs just in case we get a bit of a move to the downside. And these will be useful just in case the correction comes along. There's no implied volatility for yesterday. It's cash related, and the cash market was closed. So there we go. We've got the market down slightly overnight. Just thinking out loud here with the implied volatility. If I can gain access to the information over the next couple of days, I will post a screenshot of the implied volatility with a few annotations, so that we're up to speed. Well, you'll be up to speed with where the implied volatility is in relation to that drop on Friday, which sort of preempts a corrective move in the market at some point down the line. Again, it's just the trigger to say, look, start watching. So yeah, there's the Dow sideways to lower at that 78%, and then down on the overnight as well, but finding a bit of support at just draw this in here, 62% retracement. In the German DAX, another new high yesterday that we've seen. We must be nearly up to 1,500 points now, aren't we, from this low that we had during Christmas, 1458, so we're 42 points off 1,500 points over the last few weeks. Huge move for the DAX. It's like a melt up. 30-minute charts, bit of a pullback yesterday, but we soon reversed that, didn't we, and brought it back to Friday's high. Didn't hold above though. We had an 89% retracement in there, moved back down. Another retracement overnight, and back down towards 78% retracement from this low back to here. Watch the low. Again, in this market, we'll need to get back above the DP to get anywhere near yesterday's high. In the 5-minute chart, you can see yesterday the market sideways in the futures. The cash market opened, moved lower, and then we got the retracement, oversold, and then we just meandered up to Friday's high, which you can see there. That's Friday's high, and we did a double top on this one into the evening. Market sideways to lower, and then overnight got a bit of weakness there at the moment. In the S&P, similar to the Dow, inside range overnight at the moment, sitting at the 5-bar moving average at 62% retracement. Again, I would be inclined, just in case we get a bit of a correction in this market, to draw in some fibs to the downside. You can actually draw to these other lows as well first if you wish, but that gives you the big swing of where the market could move down to. In the FTSE 100, again, we continue to move to the upside. I think this is the all-time high that we can see here, but let's just have a quick look at the monthly charts. As you can see there, in January, the market's just ploughed ahead. We're currently at 7864 and 7903. 7,900 is the area, so we're not that far off either in this one. About 36 points to that 7,900 level. So yeah, FTSE they're continuing to move to the upside. It's actually close to the high as well, unlike the other two stock markets that we've already looked at. So still powering ahead a bit there. In the currencies, the yen, GBP, JPY, sideways to lower, trying to bounce as we saw yesterday. It's got an 89% retracement, needs to move up. GBP under 30 minutes, sideways again. Martin Luther yesterday. Pound, a bit more activity in the pound because Bailey spoke yesterday afternoon. No idea what he said. I haven't seen any news headlines with regards to this, but the market's still long as it's still closing above the 5-bar moving average there. 30-minute chart, bit of a sell-off in the morning, but no reaction to Powell in the afternoon, which would have been oops, just bring that back over, which would have been around this sort of time here. Not a lot of reaction at all, so maybe he's in heading out to Davos then with the rest of them today, but nothing to move the market there yesterday. In the dollar, up yesterday, as can be seen here, at a bit of an update for the US dollar index. Overnight, though, the market moving slightly lower. And therefore, in the metals, we were up yesterday, where we went down and then we came back up overnight. So we got some weakness in silver. So yesterday we see silver being moved lower down to the DP. We can see it was oversold. We also note that they were buying back into this market at the DP as well. Brought the market back, but overnight the market back below yesterday's close and the DP at the moment, but trying to find a bit of support to attempt to move back to the upside. Gold also yesterday managing to move higher, but a bit of weakness overnight. 30-minute chart. Again, you can see there range bound yesterday, trading up to yesterday's close overnight, and now sitting on yesterday's low there as well. The market will need to bounce off this. So there we go, quick roundup of where the markets are. Let's just have another look at the news for the week, just to see what we have got. I don't think there's anything major, is there? Oh, apart from this, which we looked at yesterday, we have got the UK CPI numbers tomorrow, which you'll need to keep an eye on those. And we've got core PPI and PPI on retail sales as well tomorrow from the US. So there is some good news to actually bring some volatility into the market. Brainard speaking on Thursday. Lagarde's also speaking on Thursday as well. And then Friday, again, we've got another central bank speech from Lagarde. Yeah, so that's so there's enough. Tomorrow is going to be the best economic news day to move the market. So we'll see what these numbers are going to be. Okay, that's it for me for this one. I'll see you on Friday. As ever, thanks for watching. See you in the next one.